Hi everyone, welcome to another Berkshire weekly update. Sam's standing in for Shingirai. Let's see what's been happening this week. When we look over the week, we see that our best performing funds are primarily the European and clean energy funds. Europe continuing its strong run, with Bailey Gifford's European returning 4.51% over the week. This is a continuation, as mentioned, of a theme that's been going on all year, as more positive news feeds into Europe with regards to lowering natural gas prices, helping to alleviate a degree of inflation worries, though inflation will still remain high for a while, and some positive news coming out slowly from Ukraine. When we look at clean energy, we see that this has been influenced due to a decrease in bond yields, which definitely impact clean energy equity prices, as well as very good news with regards to high power generation levels from wind over the last 2 weeks in the UK. When we look at what's been worst performing over the week, we see that Hypnosis has dropped down 2.89%. We believe that this is due to increasing talk over AI generated music. However, we believe that there will still be considerable pull for naturally generated music for a considerable number of years to come, as people want authentic music rather than synthetic. We see a slight decline in our China holdings of around 0.5%. This is just a slight cooling of what's been happening over the year. China's been on a fantastic run all year, over 10% return. So we're happy with a slight cooling off here. However, the macroeconomic story from China is likely to only improve throughout the year. And then finally, we see the Japanese government bond index has declined slightly by 3 basis points over the week. This is due to a comment regarding maintaining the bond yield control at the Bank of Japan. If we look at the quarter-to-date numbers, as mentioned a second ago when looking at the 1 week figures, we see Europe doing fantastically well here at over 10.7% return for the quarter. And we also see China performing well, continuation of the story of opening up and fantastic macroeconomic data feeding in. As a matter of fact, this week, the numbers that were coming in have been performing excellently above expectations. So we expect this story to continue for some time. We also see global gold performing well here over the quarter, over 10.5%. This is in part due to increased gold buying in the build up to the Lunar New Year. Of course, the first opening up of China in some time, so the Lunar New Year has particular significance this year. Looking at the worst performing funds here, we have the Japanese government bond index fund having a slight decline over the quarter. In part, this is due to being very rigid on their yield curve control. However, we'd expect in a reversal and a more defensive environment this to outperform the index, the wider market. So we are comfortable with this as is. Again, Rafa is a very defensive orientated fund. So therefore, if there is a reversal of the very growth orientated performance that we've seen over the last couple of weeks, we'd expect this to outperform the wider market. And then looking at the LT India performance there, we see a decline of 0.75%. This is in part to an element of politics going on in the country, which is quite minor. However, we expect this to play out and monitor in the upcoming weeks. Looking at the portfolio performance over the week, unfortunately, all portfolios underperformed their benchmark for the week. However, normally they are all up, which is nice. This is in part due to the fact that we've had quite a growth-orientated performance story over the week. We expect this to reverse over the upcoming weeks, so we would expect to outperform benchmarks soon. However, performance varies between CBAM 1 V1 at up 87 basis points and CBAM 5 V2 up 1.74%. Hope you have a great weekend.